Hi, I am Anna. I come from www.ntvforex.com. Vacation wrap-up: uneven global recovery amid COVID-19 flare-ups analysis. http ntvforex.com News ID 07C24E 83-2025 0010 AM. Main macro themes. More countries are struggling with second COVID-19 waves this summer. Not least, the US has seen a sharp rise in the number of new infections, although there are tentative signs the contagion is slowing in the worst-hit states, such as Florida, Arizona, California, and Texas. News on the vaccine front continues to underpin hopes that one could be ready in early 2021. Several European countries have seen a flare-up in the number of new infections, especially Spain, Austria, and Germany. More evidence emerged that Europe's economy is on course for a swifter recovery from the coronavirus crisis than the US. Euro area PMIs rebounded strongly in July, confirming the picture of recovery. However, US indicators have lost pace after the flare-up in infections. CP3 and US initial weekly jobless claims rose for a second consecutive week. Chinese GDP for Q2 showed a stronger than expected rebound to 3.2% YY, from 6.8% YY in Q1. White smoke at last emerged from Brussels on a recovery fund after a marathon EU summit yielded a compromise on the next generation EU package. CEU Recovery Fund. White smoke at last, July 21. Following tough negotiations, EU leaders agreed on a EUR750 BN recovery fund and a EUR1074.3 BN EU budget over 2021-27. The package received a frosty welcome in the European Parliament, though, keeping some uncertainty in place. Stimulus in the euro area and the US has not changed over the summer. At the July ECB meeting, there was no real news. In the US, the Fed maintained its current signal that monetary policy is not anywhere near being tightened again and that it will continue to use all its tools to support the economy. We continue to believe the Fed will strengthen its forward guidance at the September meeting by saying that the Fed funds rate will not be hiked until inflation for some time has been above the 2% target after several years of undershooting. Negotiations on a new stimulus bill in the US are dragging out and a solution before mid-August seems unlikely. We expect the eventual deal to include a reduction in benefits, which would work as a drag on growth in H2C. Not extending higher unemployment benefits would lead to a significant negative income shock. July 22. US-China tensions flared up yet again after the US moved to close the Chinese consulate in Houston and China retaliated, ordering a shutdown of the US Chengdu consulate. It looks increasingly likely that the two powers are heading for a Cold War. Fixed income and FX developments. Risk-on sentiment dominated markets in July, leading to higher equity prices and tighter credit spreads. Markets are underpinned by growth signals in Europe and China and encouraging news on the COVID-19 vaccine front. Ongoing strong policy support from central banks also keeps spirits high. EUR/USD has pushed above 1.19 and US and German bond yields have drifted lower. See charts on page 2. Download the full strategy. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.